What if you invested 200,000 naira in top mutual funds 5 years ago? Imagine this for a second. 5 years ago, you had just 200,000 naira. You could have used the money to do anything you like, maybe to buy anything. But what if instead you had invested that same 200,000 naira into one of Nigeria's best performing mutual funds? If you do nothing, if you had no money, just 200,000 naira invested, then you forget about it. Today, we are not talking about what if anymore. We are looking at what actually happened. Real numbers, real growth. What 200,000 naira will now become with the power of time and compounding. So let me explain what will now happen. If you're a new viewer, you are welcome. This channel is where we talk about investment, how to grow our money. And I try to explain in the most simple way so all my viewers can understand. Please join this community by clicking on the subscribe button. You are welcome. First, we'll be looking at those top performing Stanbic IBTC mutual funds, because Stanbic IBTC have some of the best mutual funds in Nigeria because of their consistency. They have one of the best performing mutual funds in Nigeria, and they've been around for over 2 decades. So they are managed by professionals, also regulated by the SEC, and they are available to anyone right from your mobile phone. So you can use Stanbic IBTC through their app or the online platform. And now let me tell you this: many beginners invest in mutual funds because it is one of those safe ways to invest your money in Nigeria. And apart from being a safe way, you don't have to go through all the stress of trading yourself, because these people are professionals. They already know how to trade. They know how to make sure that your money yield profit. So that is why when you invest in mutual fund, you are commanding professionals with your money that, okay, this is my money and I want to earn returns. So the professional take your money and invest on your behalf. But not just only you. A lot of people come together, they put money in a pool. So they pool money together. You, myself, other people put money together. Then the professional take the money and invest that money. But there are different types of funds. So today we're looking at the top funds that performs very well. We are looking at the equity fund. The performance of equity fund. If we put 200,000 naira, we are looking at the balanced fund. The balanced fund is also one of those top performers. And we're also looking at the E-Man fund. The E-Man fund. So these funds are from the Stanbic IBTC mutual funds. Now let me show you the 5-year performance figures of equity fund, of the balanced fund, and the E-Man fund. But before I begin to show you, these performances might not be future performances, because past performances does not matter. So this fund has performed very well in the last 5 years. So we are looking at from 2019 till now. So this equity fund have done 357.54% in 5 years. The balanced fund has done 212.21% in 5 years, while the E-Man fund, the Stanbic IBTC E-Man fund, has done 401.28%. 41.28%. So these are the performances of these funds. 357.54% for the equity fund in 5 years. 212.21% for balanced fund in 5 years, while the E-Man fund did 401.28% in 5 years. So these numbers mean that for over 5 years, your capital didn't just grow, it multiplied. And that is why consistent investors are smiling today. How can you understand the numbers. When we say a fund gain 357.54% in 5 years, what does this mean? It doesn't mean your money grew by that percentage every single year. No. It means that over the entire 5 years, 5-year period, your total growth from profits, dividends, and reinvestment added up to that figure. So if we annualize those returns, here's roughly what it looks like. Now, if you want to annualize it, that means the equity fund gave about 35% average yearly growth, while the balanced fund gave around 25% average growth. And then the E-man fund gave about 38% in annual growth yearly for the past 5 years. Now, just pause for a moment and think. Your savings account gives maybe 4% to 5% per year. Meanwhile, these funds were growing 7 to 8 times faster than your normal savings accounts. And that's why mutual funds are a quiet wealth building machine, especially when you stay invested for long term. Now, let me quickly explain what compounded versus non-compounded, what it means. When you invest in mutual funds, your earnings are usually reinvested automatically. So that means when the fund pays profits or dividends. Now, let me make that clear. Not all fund managers do that. You can instruct, like I know of Stanbic IBTC, you can instruct them to invest your money, both your profits and your capital. You can instruct them to reinvest it for you quarterly or yearly. So when it is reinvested, they go back into your investment. That process is called compounding. So, and that is the secret behind those massive numbers you are seeing. So now let's go into the practical aspects. Let's look at how 200,000 naira, how this fund would have grown in each of the fund, but with compounding and also without compounding. That is, if we compound it quarterly, we return and reinvested it every 3 months. Okay, let's start from the Stanbic IBTC Nigerian Equity Fund. Now, we say this one, the 5-year return, the total 5-year performances is 357.54%. Total 5 years performances on the Stanbic IBTC Nigeria Equity Fund. So this means it gives an annual yield of annual yield. Let me say PA means per annum of 35.75%, 35.75%. So let's say this is just the annual yield, If you didn't reinvest this, no compounding, your 200,000 naira will now be worth about if it did not compound, no compound. So that means it's going to be worth about 905,000 naira in 5 years. But if you compounded quarterly, letting your money grow every 3 months, your money is not going to be this 915,000 naira. It's going to be 1,122,000 naira. So if it is compounded quarterly, that means you make more than 900k profit simply by letting your money stay invested. Remember that we only invested this without adding any top up. 200,000 invested for the space of 5 years on the Stanbic IBTC Nigerian Equity Fund. The next one is the Stanbic IBTC Balance Fund. If you invested 200,000 naira 5 years ago on the Stanbic IBTC Balanced Fund, now the 5-year total return, 5-year return of the Stanbic IBTC Balance Fund is 212.21%. So this means that annualized, the average annual growth is about 24%. So per annum, average growth. So this fund the Stanbic IBTC Balance Fund mixes stocks and bonds. That means the professional invested all the money put into this Stanbic IBTC Balance Fund into stocks and bond, making it less risky. So, and without compounding, your 200,000 naira invested 5 years ago becomes 624,000 naira without compounding. With quarterly compounding, this 200,000 naira will go to 652,000 naira. You can see that compounding allows you to earn even more money. The third one is the Stanbic Iman Fund. The Stanbic Iman Fund. So this one is if you invested 200,000 in the Stanbic Iman Fund, the 5-year total return is 401.28% for 5-year plan, 5-year performances. Now, the average annual growth per annum, that means per annum you got about 38% per annum. Average annual growth. So the Stanbic Iman Fund is an ethical investment principles, ethical investment type that invests that puts money in things that don't do anything with alcohol. So simply say, every fund you put into, you invested in the Stanbic Iman Fund. The fund manager don't invest the fund in any companies that deals with alcohol, any companies that deal with gambling, or even interest-based instruments. So that is why the Iman Fund is called ethical-based investments. Now, if you invested 200,000 naira in the Stanbic Iman Fund 5 years ago, without compounding, your 200,000 naira becomes roughly 1,002,000. So without compounding, it becomes 1,002,000. But with quarterly compounding, it will now be 1,204,000. So imagine the extra earnings because of quarterly compounding. That is over a million naira profits from just your 200k in 5 years. Compounding may look small in the short term, but over time, you will see the difference in the kind of wealth you could build with compounding. So those who started small 5 years ago are now smiling. Imagine just 5 years ago, what 200,000 naira will become now when invested. But this does not happen. It happens because, not because they have a lot of money. It's just 200,000 naira. But because they invested and let time do the heavy lifting. Time makes the difference. Time and compounding makes the difference in investing. But of course, past performance doesn't guarantee future results. Markets rise and fall, and returns vary year to year. But one thing I want you to know is this: those who are consistent, those who invest consistently, no matter how small, always have a story to tell in the long run. So if you have been watching from the sidelines, if you are saying, I will start investing in 2026, I will start next year, I will start this year, that next year has already passed 5 times. So start now. Even if it is 10,000 naira a month, it can grow into something remarkable over time. Thank you for watching this video. I'm Dahunsi, and this is Money Talk with Dahunsi. Thank you again. Don't forget to like this video, subscribe, and share with someone who needs to see how will investing works. I will see you in the next video.